the first meeting, the final meeting, or should I wait for it to come out in DD?
We're right in the thick of it here, VK. I'm not sure who asked that question,
but we've said in previous provisions, this is all about a marriage. So, have people split up between engagement and marriage? Of course they have. Sometimes it's right at the altar.
Or fraud, if we go back to the very first question. But let's not head in that
we
direction.
Probably shouldn't answer that one. Okay, can we continue this? Because my problem with that is.
So, definitely not to have it come out of DD. Let's be clear about that. I suppose it depends on what the fraud was for. Rogan, if you remember, we had a meeting with the founder probably 7 or 8 years ago who was quite open that he had done some naughty stuff in university. And he told us basically at the end of the first meeting. So basically, I think you could read that the meeting went very well. And he said, by the way, guys, just so you know, you're probably going to Google me. There was some stuff that happened in my university days. I'm not particularly proud of it. Here's what happened. Here's the ramifications. Here's what I've done since then. And I think we probably left the room, I don't say more positive, but at least appreciative that he was open and direct with us in that meeting.
Yeah, reasonably shell-shocked as well, because it wasn't expected. I mean, BK, the reality is anything that comes out as a disappointment in DD or even the kind of second, third meetings is not great because it's all about momentum. And so for me, fraud, anything, be upfront in the first meeting. Don't expect that we won't find it out. And even if we don't, it's going to be miserable when we do, once we're invested. And I think, you have to be upfront and explain. Fraud's going to be a difficult one to explain. I don't think we've pulled any deals because of something we found out in DD. We've definitely seen incidences of that, and sometimes even an incident where it was something that was discovered in DD, which was not actually a discovery at all. It was an error on the part of the other investor. But I suspect that was a reason for going out rather than the other way around. But again, I mean, I would have no compunction if it was something meaningful that I found out. A term sheet is not binding because it's not binding. I think there's a moral obligation. But we've said in previous provisions, this is all about a marriage. So, have people split up between engagement and marriage? Of course they have. Sometimes it's right at the altar. We hope not in this situation. So it's going to happen, but only if both sides haven't been open to each other.
Now, Rogan, we have actually seen ourselves, companies of ours that have received term sheets from next round investors, and they have pulled out at very late stages. And it is incredibly frustrating for us. I can only imagine what it's like for the founders. Right, so you went out, let's put some real numbers behind this. Maybe you went out to say, I want to raise $2 million. The lead investor said, great, we'll do $1 million, and you can't bring the other $1 million in, if we think about that. I'm trying to put myself in the shoes of that VC. I guess the question always for every round is, are you raising enough money to prove something meaningful to be able to go to market again? And if I believe that actually with that $1 million, you could generate enough proof points to raise more money at an up round, I suppose I might not be wholly against it. But once again, coming back to the momentum thing, it's quite frustrating if you say, boy, these guys, I'm in, why is no one else in, right? That leads to a whole...
But wait, I think VCs should be upfront about these things as well. And so actually, a commitment that says we're in if somebody else is in, A, is not as strong as a commitment usually as we're just in. But B, needs to be spelt out that those are the kind of what you're going for, because it's weaker. Not always weaker. I mean, if it was a £5 million round, we cannot write £5 million checks, so we'd have to have other people behind us.
Yeah.
But I think that realistically, you need to be upfront about these things.
Yeah,
I think there's going to be a
situations where we have put a term sheet down and said, we will help you find the rest of the round, right? Let's go out to our network and try to bring it together.
I think by and large, our view is when we invest that we're there for the long term. And rightly or wrongly, we're anticipating that the founders are there for the long term as well. So we anticipate working closely with those founders for a number of years. Of course, secondary will happen. I think the typical time for it to happen is probably around the kind of Series C mark. But I've always been a big believer that we have to recognise that it's not the worst thing in the world for founders to take a little bit of liquidity early. Often they are paying themselves drastically below market rate. They've got all their eggs in one particular basket, which is their company. It makes total sense to me that you want to diversify just from a kind of financial risk point of view, and provide for things. So I would be fine with it a little bit earlier, but we always do this tightrope between not wanting them to take off so much of their skin in the game that they no longer are interested.
That's the thing, right? We want founders to be incredibly hungry for the very, very big exit. And to use an analogy, we don't want people to get soft, right, on the cash that comes out. We don't want the founders to be struggling to make the mortgage payment, right? Yes, we don't want them, if what I mentioned earlier, getting soft based on a huge exit. But on the other hand, we also don't want them worrying about whether they're going to be able to make the rent payment this month. And so we understand that people are going to be taking below fair market salaries. But even that changes as the company matures. For our companies that have raised a Series C or a Series D, I think the salaries are actually probably closer to what market would be for someone in a leadership role at a company that size, whether it was a startup or not. So now we have, I always think it's good to bring up original stories from the portfolio, Rogan. If you remember, we had some founders that after a year came to us and were on an exceptionally low salary, and were basically almost begging the board if they could get a slight bump so they wouldn't have to worry about actually making the rent payment because their landlord was increasing the rent that month. Now that is, yeah.
Although I had a situation when I was raising money for a company pre-Pro Founders, and some reason the VC had actually said they were going to back me and everything, and then dropped in that their view was that founders shouldn't pay themselves anything until the company was profitable. And given that it wasn't going to be profitable, even on my wildly optimistic forecast for 4 years, I explained that that was impossible, and the VC wouldn't move, which was mad because I'd have spent half my time, desperately trying to feed myself and find the next loaf of bread. So definitely, you should expect post-seed round get a VC for not extravagant salary. I think different VCs do different things. My view is that actually founders are still very much in control. And so you can have effectively VCs as involved or not as you want. My kind of caveat to this would be, it's good to have a kind of a long relationship with your VCs, not only turn around to them when you desperately need them. I'm going to go back to my marriage analogy. Marriages are easy when everything's swimming and you're on your honeymoon or whatever. The key times are when there's a problem, and if you haven't been respectful towards each other before that, you're not going to be respectful towards each other during the problem. So always have a relationship. I think I probably am overly keen to get involved. Probably annoy the hell out of the portfolio companies or the CEOs that I'm on the board of. But I think what is definitely clear is that VCs should be helpful in preparing a company for the next round, in finance, in sharing experiences, because although they wouldn't have run that specific company, we've seen lots of companies, and last week or 2 weeks ago.
Rogan, I'm going to jump in here. We've only got 10 seconds before VK gets down 9. I think you shouldn't expect too much from the VCs. VCs have a lot of different things going on. They manage 10 portfolio companies. You can't expect them to be there on a day-to-day basis. You're fooling yourself if you think you're going to get that level of assistance. That's not what a VC is set up to do.
VK, can we continue this? Because my problem with that is we don't want people who need a VC there daily.
Yeah.
So I agree on that, but I think you should expect a lot from your VCs, and if you don't get a lot from your VCs apart from money, why the hell should you treat your VC as anything apart from a piggy bank?
Sure,
so
but
it is beholden on us to provide that help, not just because it helps the company and because it's the right thing to do, but because it allows that relationship to burgeon on both
Of course,
sides.
but we should not be in there doing first round interviews with every single candidate for the company. That is not where I would say our time is best spent with the founder, right? Our job with the founder is really helping them, I've always thought, make the tough trade-offs and investment decisions they have to make. They have limited time, limited money, and they need to invest that wisely and generate enough proof points to raise that next round of capital. We can help them think through some of the strategic decisions they have to make. But if you expect your VC to come in and help you structure the finance team, that's not what their job is. If you want them to do first round interviews with people, no. If you want them to do a last round interview between two candidates to choose the new head of sales or the new VP of finance, absolutely, that's where we can be helpful.
I'm going to say one size does not fit all. If we've invested in somebody who does want those first round interviews, if we want to,
our job's not scalable then. We can't do that. We can't.
Our job's not scalable. Our job isn't scalable.
I'll continue here, Rogan, if that's okay. So our general approach, and I think I do speak for Rogan in this one, is that we want to have formal board meetings probably 4 times a year. But a formal board meeting is only that, a formal board meeting. What we actually want is regular interaction with the companies. So for every new investment that we make, what we do is we put in a regular every 2-week video chat with that company. And the point is that that is there just to ensure that we are chatting and conversing. We expect emails to flow almost every single day. We want calls anytime there's any sort of questions. But I think from a formal, structured, let's get everyone together, it doesn't need to be as frequent as people.
I think we need to say what we're asking for and what we're giving, as it were. So the reason that we have every 2 weeks or every month a call is in part to help the entrepreneur, but it's in part to help us because we have to report back to our investors. And the ask there is saying, look, communicate with us because it helps us. That builds a relationship, which means that when you need something from us, we'll give it back. Literally, it's just a give and take thing. And so in that situation, I think we're taking. But we're always, and we should always be around, as Sean says, if something goes wrong. So anytime, even if we've communicated 2 days ago, if there's something really urgent, we should be doing it. But we also want to take, and we expect that two-way relationship.
I think a board pack is not meant to be a 120-slide, 4-day preparation effort. That is not what it is meant to be. It is meant to be a way to stimulate an in-depth conversation with your investors. So there are a couple things that are needed to get everyone on the same page. So what are the metrics and KPIs that you report, that you've agreed with the investors that you'll report on? Sort of a snapshot of the finances. We do love to see the P&L, the income statement, the balance sheet, etc., so we can understand where the business stands. But beyond that, I think we really want to know what are the problems, what are the concerns, what are the big strategic decisions that you're facing over the next month or quarter. And let's address those. And frankly, send the board pack out 2 days in advance so everyone has read the numbers and the metrics and the financials, and we can have a more substantive conversation about the issues that you face from a business perspective.
A couple of things about board meetings, aren't there? I mean, in reality, they're meant to be around governance. We use them as kind of management strategy meetings, but often we also use them because if we're not getting that kind of two-way relationship through the month, it's a guaranteed time when we do get the numbers and we do get to sit down. So that, by the way, is not a great thing. But where it is good is, I think it's a time when all of the investors or all of the board members, observers can sit down together. So it's kind of group strategy meetings as opposed to the individual monthly ones that maybe we have one-on-one. I mean, the board, from a kind of, like I said, from a regulatory point of view, from an oversight governance point of view, has some preset in every company controls, including, by the way, who the CEO is, but we're not going to change it like that. But that is one of the things that is in the hands of the board. There will be undoubtedly in your legals a bunch of things that become reserve matters, not for board, but for investors to vote on, usually the preferred investors. But my central view is that founders retain an awful lot of the control, in fact, all the control, and that's the right thing as well. The only thing we can, and we've touched on this before, should ask for is listen to what another view. synthesize it, put it in with lots of other views, and then come up with a decision. But it's ultimately the founder's decision.
I think that's the key thing. The board, there is the governance perspective of the board, but the rest of the board is really an advisory role to the founders and to the management team to help assist them in making the right decisions. Frankly, when we invest, we're investing in a team, and we're there to support them. If we're at the stage where the board is making decisions, that means something has probably gone wrong, and you're in a very tough spot from a company perspective.
Are VCs punitive if things go wrong? And will you replace the founder?
Actually, we're totally soft, I think. And I look, and I mean, that's kind of partly the stage that we invest in. It's partly, I guess, Sean and I's personality. I've seen people being a much tougher than us. But I mean, I'm going to sound like, well, I am a broken record on this one. The reality is, we're not in the business of punishing anybody. I think the biggest thing that is not understood on both sides is we kind of all want the same thing. We want a successful exit. We don't want to try to run the company. We don't want to screw things up. We just want a successful exit. And so really, we should never be penalizing people. There should be a perfectly reasonable decision and discussion about whether at different stages of the business, the founder is maybe the right person for a CEO job, maybe they should go into a different job, but that should be done in consultation with, not kind of an us against them.
Let me tell you the approach that doesn't work, which is to surprise them with bad news in a really big sort of format, right? Holding things back to the board meeting when you can present it to everyone with the hope that no one will kind of jump down your throat as a founder. I mean, the fact is there should never be shocking news that comes out at a board meeting or even in advance of that, right? Because frankly, these things don't happen all at once. There are generally signs and there are indicators. And so, yes, but that is things outside of your control. I mean, generally, it shouldn't be that we missed the month by 95%, because frankly, you should have an early read on that through some of the KPIs of leads or whatever it might be, and you should be sharing that information with your investors. So I think pure shock.
One of your partners might stop the contract, or and that will be instantaneous. Yeah. Sean and VK and indeed Joe has all heard me saying the best advice I ever received: you run to tell people bad news, you can walk to tell them good news. And it's like ripping off a plaster. Once you've done it, it's so much better. Trying to cure it yourself is never going to work. It will always come out. And like I said, we're not there to punish.
What do they always joke? It's never the crime. It's always the cover-up, right? I think, and that is the thing with bad news as well. The sooner you can get help and assistance and advice on it, the better chance there is, I think, to recover from whatever it might be.
I don't know the best way of answering that question, but I'm glad I'm not doing it.
Well, I mean, it almost comes back to Rogan's analogy of venture investing being like a marriage. Do marriages go sour? Of course, sometimes it does. There are usually underlying reasons why it tends to go sour, right? And the same thing then with VC and founder relations. Obviously, if things are going well within a company, it's much easier to paper over the issues or concerns that might be there. And it's usually when performance isn't there from a company perspective that these issues come to the fore. I suppose a lot of it depends on the structure that the company has, right? It might be that there's someone else who's an investor that could perhaps step in and take the board seat instead of that one firm. But it comes down to the rules and the governance of the company and what they have in place. But I think, like a marriage as well, everyone should work hard to try to ensure that these things
the thing, isn't
don't
it?
come
You have to be grown up. I mean, if things aren't perfect, great, but don't either side become vindictive or crap about it. Because when it comes down to, although we've just described it, I have a lot as a marriage, it's also a business relationship. A business relationship where ultimately like I said, we both want the same thing. And so, as long as you keep it business, never get personal. And, that's the best way of doing it.
And listen, I think we also understand that it's not going to be perfect 100% of the time, right? We are taking a portfolio approach to investing in startups. Guess what? There's no guarantee of success in the startup world. And sometimes things can go bad. Well, it depends on how later you mean. If it is later as in 3 months post-investment, I guess there's a pro and a con to that. I guess the negative would be, oh my God, what are we just invested into, and why are they changing tack all of a sudden? But I suppose if the founders were open with some of the learnings that have taken place, and we all agreed that, frankly, the original vision didn't necessarily make sense, and there's a new opportunity we want to go after, a proverbial pivot, then that could be fine. And we've seen that with companies as well.
I think the question was is if we don't agree.
If we don't agree. Fair enough. Okay. I'll let you take it then, Rogan.
Well, it's not a lot we can do about it. Like I say, it's the founder's choice. I think it is right to look at the timeline. If it happens the next day, I'm personally going to feel like I've been duped. If it happens 3 years down the line, almost definitely the founder's right and I'm wrong, and that's fine. But we're often wrong, and we certainly don't have a crystal ball. So ultimately, it's got to be the founder. Just go back to every single answer I've given, which is if it's explained in the right way, I'd have to agree with it. But as long as there's some logic there, that's great.
But Rogan, I've heard a lot of both of us saying the founder decides, and I think that's part of it. Is that in the end, founders think that I guess technically they do report to a board, but they think that they don't have as much control over the business and the strategy as they actually do. In the end, they're the ones running the company. The VCs are backing their vision, and they should do what they think is right.
I agree, and I know we're over, but just to finish it off, that is all 100% right. Equally, founders should acknowledge that there is a relationship with the VC, and so therefore control should not be abused in a kind of autocratic way.
I have nothing to add.